what was Bitcoin's lesson? And I think the lesson was you solve the problem with a market, not with a blockchain. You must create an economic incentive that causes individuals without coordination to show up and provide the service. We've had, for example, the ability to build mesh networks for a very long time. What we haven't had is the economic incentives to drive people to take risks to participate in mesh networking. I don't think it's, for example, Nostr's job to optimize the delivery of bytes across a telecommunications network and to incentivize that properly. That's a Lightning Network concern. The Lightning Network is, as we said, a kind of a private monetized internet. But the market that Satoshi built that defines the way Bitcoin operates at layer one had to connect to these concepts of energy and solve problems around timekeeping just to make the money. Bitcoin is going to have to change. It's going to have to change over time. It's not done yet. Whether the changes that were made were the right changes or not, I don't know. We can't just go out and replicate Twitter today on top of Bitcoin. We first have to go build all those layers. And inevitably, if you think about those more complex layers, you actually just back into, well, really, what we just need is the ability to send each other bytes on the internet, like for sats.
Dhruv Bansal is a physicist, entrepreneur, and the co-founder of Unchained Capital. In our conversation, we discussed the idea of scaling Bitcoin in layers, the importance of distributed markets on Bitcoin, Lightning, and beyond. And we even touched on things like Nostr, Tor, Ordinals, and frameworks for better understanding Bitcoin. Dhruv has also asked to have his share of today's show splits forwarded to Jose from the Talking in Bits podcast. So if you enjoy this show and if you learn something new, the best way to show your support for this show and for Talking in Bits is by sending in sats over the Lightning Network. You can use any podcasting 2.0 app. There are dozens of them, but my favorite to use is Fountain. Before we get into today's show, just a quick message from our sponsors. Today's show is sponsored by Voltage. Voltage is the premier provider of Bitcoin and Lightning node infrastructure. Today's show is also sponsored by Stackwork. And Stackwork is a Lightning-powered transcription tool that takes the best of AIs and humans to create better, faster, and less expensive transcripts. We'll have more from Voltage and Stackwork later in the show. Dhruv, welcome to the show. I'm so excited to chat with you because you were actually one of the few people who got me initially interested in the Lightning Network. I haven't talked about this on the show before, but early in 2021, when the Bitcoin 2021 conference happened, I believe it was Jack Mallers did the El Salvador speech, and you and Ryan Gentry did a talk about the Bitcoin stack. And
That's right.
Both those events kind of, it started something in my brain. It wasn't immediately obvious to me then, but only a few months later, I really started digging into Lightning. I started this Lightning podcast, really started realizing what this second layer could become. So thank you for introducing or reintroducing the idea to me. I think I had heard about Lightning back when it launched and just didn't follow along with it. But I want to get into this, this speech you had at Bitcoin 2021 and we can do like a little bit of a reflection on it, because I think it was a very important speech that listeners should go back to and listen to. I'll put it in the show notes. But I thought we could spend a chunk of time today going through that, reflecting on it, and assessing the state of, the Bitcoin stack today. But before we get into that, why don't we just give a quick background for listeners who aren't familiar with your work? Tell listeners about how you first discovered Bitcoin and what you set out to solve when building Unchained.
Sure, yeah. So for everyone listening, my name is Dhruv Bansal. Thank you so much, Kevin, for having me on the show. It's an appropriate time for me. I'm thinking a lot about Lightning these days, both professionally and sort of in my free time. It's an endlessly fascinating ecosystem for me. I think I know very little about it, but I think a lot of it, and I expect a lot of it, and I'm excited to talk about that stuff. History-wise, prior to Bitcoin, I was a physicist originally. That's kind of where I grew up. That still colors my thinking to a great degree. I think even within Bitcoin, I'm sort of well known for some writings about Bitcoin in space and all sorts of crazy futuristic stuff. But most of my time isn't nearly so esoteric. I'm mostly just focused on Unchained, a business that I started with Joe Kelly back in 2016. The origin behind that is really just I had started as life as a physicist, but then got into big data and cloud computing and distributed systems. started business with Joe actually and another co-founder in 2008 actually, around that area. It was a great time to be getting into big data and DevOps and cloud computing. It was also awesome because it gave me a great background to understand distributed systems just in general and the challenges that distributed systems have. Now, I would probably say with time foremost. It's a blunt way of putting some of those challenges, but I think it's accurate. And I kind of viewed Bitcoin when I first heard about it in 2011, when I was in the middle of that journey with that prior business, as a kind of a new, interesting take on how to do a database in a distributed way. I was very computer sciencey in my reaction to it. And I just thought it was totally cool, but pointless, right? I didn't understand anything about money. I had no money. I wasn't curious about money. And I remember just thinking, what a cool project that, will probably go nowhere because it doesn't seem like it's solving any real problems for anyone. And then a few years later, 2013 or so, I think I'd sold my business. I had some money for the first time ever. I heard Bitcoin was like 100 times more valuable than in 2011 when I had first heard about it. And I thought, like, one, I've missed the boat, right? Clearly, that's what everyone thinks when they start to get into Bitcoin. And two, it made me conjecture that maybe there is some utility to this thing after all. Like, there's a sort of bizarre way in which if Bitcoin were successful, then it would be successful. I just sort of ever doubted that it would ever, get to $1 or $10, and had clearly done so. That really helped. That forced me to reevaluate my priors and what I thought was happening. And maybe it's a good idea to get some just in case, right? To quote Hal Finney on this. So I did that. Of course, I wish I bought more. Didn't think about it much for a few years, but as Joe and I were kind of contemplating the next business we wanted to start, we thought a lot about data and distributed systems and databases. That was kind of where we grew up in our first business, but our hearts were really in Bitcoin. We had sort of already fallen into the rabbit hole. This was around 2015 or so. And I remember a conversation over a weekend where we were both supposed to have done a bunch of research on, the food industry and the construction industry and a bunch of places that we felt, data expertise like ours could be helpful. But instead, we both just read about Bitcoin all weekend. And it sort of Monday morning, the realization was maybe we should just do what we want to do and not, hold ourselves back because it, and for us at that time, 2015 or so, it just felt crazy a little bit to start a Bitcoin company, but that's what we wanted to do. So we did it. And again, it turned out to be really good timing. Unchained, for listeners that don't know, we got our start in collateralized lending, so Bitcoin-backed loans. We're probably most famous for our collaborative custody vault products. We really focus on security and what banking could look like in a Bitcoiner world, right? So holding your own keys, but still getting banking services, having to deal with, unfortunately, things like KYC, AML, banking laws, regulations, taxes, but getting the benefits of regulated financial products like credit, advisory, all sorts of other things. So Unchained has been an awesome experience and a great success in a lot of ways. We're still building. We're not where we want to be yet. There's a lot of growth and a lot of Bitcoiners and a lot of self-custody folks to mint yet. But it's been an awesome journey, in particular because it's really exposed me to so many amazing people in Bitcoin. And that's a theme I'm sure a lot of people will probably talk about on your show. But like, Bitcoin is just full of fascinating, interdisciplinary, original thinkers, banging their heads against some really hard problems, and doing it with passion. And it's been a privilege to feel like I'm part of that community to some degree and get to speak at events like Bitcoin 2021 and conjecture a little bit about where the future might go. So really excited to be on the show and getting to do that with you for much longer than the 20 minutes, unfortunately, that Ryan and I had back in 2021 to kind of talk about some of our ideas.
Yeah, we're going to have a good time double clicking on some of these concepts. Maybe first we can start off with the introduction of the Bitcoin stack and this discussion. You basically, both of you kind of got up on stage and you explained that, yes, you could do all these interesting things and useful things with Bitcoin, and no, you did not need an altcoin to do it. And I think at the time, there may have been people that agreed with you at the time, but my sense is that it was still a bit of a controversial idea. And this was in all the altcoins at the time were, raging in price, that everything had blown up with COVID. Everyone kind of bought into this narrative that these things were valuable because price had gone up, and here's this chart, and they all occupy one space on the chart, so they must all be useful if they're all on the same chart. But now it seems, now if we fast forward 2 years here, my view of it has changed completely. I now have a lot more conviction in all the things that can be built with purely Bitcoin or no Bitcoin at all, as we're seeing with things like Nostr. Do you start to see the tides changing a little bit? Like, I'd love to hear your thoughts on how the sentiment around you has evolved in terms of like what can and cannot be built on Bitcoin since you made that speech in 2 years ago.
Yeah, maybe I'll try to get there with like a roundabout answer, see if I can walk my way through this without getting lost. There's a wonderful novel that I really like by Neil Stephenson, who I think is an author. If you're a Bitcoin person and you like science fiction, definitely check out Neil Stephenson, who basically almost invented Bitcoin in the 90s with Cryptonomicon and whatnot. But he's got a great novel called, I think it's Anathem, or I'm not sure how to pronounce it, but the central conceit of this novel, without giving too much away, is that there's these weird nerdish monks that live in these, tower-like constructs, and they just have these layers, and the monks on the outside are like more normal, and they're kind of like approachable by the village people and whatnot, and the monks closer and closer in the middle are just crazier and crazier and have been there for longer and longer and are just way more steeped in like the traditions and mythos of whatever strange things are happening in this place. It's a very compelling, cool novel. I think about Bitcoin like that sometimes, where it takes so much effort to get to the middle of Bitcoin, which is to say, to be thinking about the kinds of issues that Bitcoin OGs and developers and core contributors and entrepreneurs and wallet builders and like folks who've been here for a really long time, who've been thinking about Bitcoin issues for a long time, who've fallen for a lot of the bullshit before and then gotten cleverer and walked away from it. It's hard to go find those people. I think a lot of times they're not as loud as the people who just got to Bitcoin and really want to talk to you about nutrition and politics and instead of Bitcoin and tech or money. It's easy to get distracted, I think, and lose the vision. And we're not even talking about altcoins here. I'm talking about already the Bitcoin community, which is already sort of within a bunch of layers of nonsense that you have to get through if you're just a person on the outside trying to break in and understand what is real here. So with that said, I would say that the kinds of things that Ryan and I talked about in our Bitcoin Stack presentation from a couple of years ago, and most of probably what I'll be talking about today, I don't know that is super original to me. I think these are thoughts that if you were to be able to bend the ear of certain OG developers and folks who've been in Bitcoin for a long time, like they'd probably agree and they'd say, yeah, that stuff makes sense. We had conversations like that on Bitcoin Talk in 2010. I thought that was all ironed out. And this is a phenomenon I've noticed a lot. Like I see this in my own business. To a degree, folks like myself, some of my lead engineers and architects, and some of the early folks who've been at Unchained for 4 or 5, 6 years in some cases, they've got all this context. There's just all this stuff that they know, institutional knowledge, notions of where Unchained wants to be, where we are. Folks who come in more recently, they don't have that benefit. And sometimes they have ideas that are really well-spirited and they want to contribute, but they don't have the context. And they'll say, hey, what we should do? We should build this little tool. Let's use this service. Let's add this thing. What about that feature? HTML emails, this thing, this other thing, whatever the details are. I think part of running an effective business is helping them get that institutional knowledge that some people have out to everyone so that everyone can more quickly understand, okay, well, that might be a good idea at first glance, and that's why you're having it, because this is your first glance. But if you spend enough years here, you'll see like there's deep reasons why like that's not going to work out. Like we actually have this totally other plan. Yeah, it's probably going to take years to get there, but it's ultimately a better route, and that's how we think about that issue. Sometimes you might imagine at a startup, things are moving fast, people are busy. It's hard to get that information, that context out. Sometimes it comes out over happy hour, right? It's not part of any official document somewhere. It's just part of the wisdom of the business. Bitcoin's like that too. When you get into Bitcoin and you say like, I just got here, I'm here to fix this thing. Have you guys thought about this issue? What about the environment? What about this thing? What about Turing completeness? I want to be able to do this calculation in Bitcoin. I get it. I know why you think that. I thought that too. I'm not even trying to paint myself as some OG, but I have been in Bitcoin for a while, and I thought those things. It took time for me to understand why that's not really the concern. It took time for me to try to find my own signal, like what if Bitcoin has a plan, has no leader, but if it has a plan, it's going to unfold over decades. It's going to take time for Bitcoin to do a lot of the things that you might want it to do right here and now that you're excited about. And I think if you talk to some of the OGs, they'll agree. They'll say, yeah, like, eventually stuff like that can happen in a Bitcoin world. It's probably not happening on the blockchain. It's probably happening through layers. And there's systems and markets that are deeply embedded in that, just like in the real world of fiat. Like where Bitcoin is a revolution, but it doesn't fundamentally change the nature of reality, I think, in the way that some people might hope it does. We're going to be replicating a lot of the same kinds of market-based layered structures that already operate in the human economy. We're just going to be doing it in a more efficient, more transparent, more directly economically incentivized way, which I think would just make it more efficient. So in that sense, this is a long rant to try and say, I don't think anything that we said was really new, but I do think it's not widely known. And if I have any goal at all, it's to try to channel to the best of my ability the things that I think are more or less like, if you were to get a core developer who's been working on Bitcoin like for years, and you were to ask them like, how do you envision like the internet works in 50 or 100 years? They'd probably tell you a story like what I'm going to, if you could get their time and focus on it. Maybe they haven't thought about it in a while. They're focused on PSBT parsing or something. I don't know. But these ideas are out there. They're pregnant. They've always been there. A lot of these crazy things got talked about within the first couple of years of Bitcoin, like on forums, by people that aren't on Bitcoin Twitter right now that we've forgotten. And so to a degree, Ryan and I both are just trying to channel some of that knowledge and maybe try to, because there is no plan, because there is no leader, there is no foundation to make like a document that says, here's Bitcoin's product roadmap, right? Like it doesn't really have one, but at the same time, I think there is a collective understanding amongst folks that really get Bitcoin about like how things might develop on it. It doesn't mean there's agreement. There's often disagreement, as we find with things like Nostr and Ordinals and other stuff that is in the spirit of what we're probably going to talk about today. But yeah, it's not new, but it's not widely known. And I think opportunities like this are great because people who assume that because Bitcoiners aren't talking about this thing, it therefore is undesirable or impossible, it might just be we're not ready for it yet. We have a decade or two of core adoption before that makes sense. And I'll toss out one more analogy on this. Like this is something often, Bitcoin often gets compared to the internet, and I think that's a broken analogy in a lot of ways, but I'll do it just this one time. So, there's a great line about like Amazon, when they got started, they picked the exact right thing to sell on the internet. Like they picked books, right? Because books are fungible. They don't go bad when you store them in a warehouse. You don't need to see the individual book itself before you make a purchasing decision. You can just buy the instance of that book because it's the abstract concept of the ideas in the book that matters. You can get a preview into the book. Great thing to sell on the internet when people are first beginning to do e-commerce on the internet. In the same era that Amazon is launching, though, you have services like Cosmo in New York launching, which is basically Uber Eats and just-in-time human task stuff like TaskRabbit. You have Furniture.com and Pets.com and all sorts of stuff launching, which is like totally makes sense today and are real businesses today. But in that era, were impossible. Like smartphones didn't exist. You didn't have the logistical like last mile like stuff to make a delivery online thing actually work. You didn't have trust from consumers, and you didn't have like the changes that happened to the transportation and shipping industry as a result of massive online retailers like Amazon, like the warehouses. You didn't have all that stuff, so you couldn't do furniture and big things as easily. It was more challenging. It wasn't wrong to say that those businesses make sense in the internet age. It was right, but it was wrong to launch them in 1997. And so to a degree, that's often my attitude when I hear about stuff that altcoiners are excited about. Like, does it make sense that identity is related to, if not the blockchain, then at least the concept of programmable money? Yeah, I think so. That are we going to have distributed property titles? Yes, Bitcoin is a distributed property registry. Like we're going to have versions of that for other asset classes, whether they're NFTs or traditional equities or stocks or all sorts of new things. Like, yeah, they're going to exist, but they're unlikely to be built today in their final form. And then if we build them today, we're going to be making trade-offs, and we should expect to hit walls and scaling problems. And it doesn't mean it's not worth it to work on those things, but it does kind of mean you got to be a little conservative and principled in how you allocate your time. So if someone like me who's in Bitcoin, you're like, well, okay, even if you see the whole future or whatever it is, what does it make sense? Does it really make sense to work on Bitcoin mesh networking today for the Bitcoin powered internet? Like, I wouldn't work on that. But I'm conservative now and I'm older. If you're 20, maybe that is the thing to work on, because by the time it's going to matter, you're going to be there and you're going to have figured it out. Today still feels like L1 is not there. Like adoption at the basic level is not there. Key ownership is not rampant. It's going to take a lot of time for that to get to the point where higher layers like Lightning and stuff become even more valuable. That drives demand pull for layer 1. That starts to become a ground for layer 3 applications. And it's not all going to happen at once. It's not even going to happen in order. It's going to be chaotic, again, because there is no leader and there is no roadmap. But I think just trying to communicate to folks that there's some likely way this all plays out over the next few decades, and that it's not a foundation launching a near private coin on proof of stake, a sort of programmable AWS with more steps. Like, I don't It's compelling now because it gives us the illusion of something working, and we get to feel like we're made progress. But those systems are brittle. They can be shut down. There's too much centralized trust. They're toy models for much more sustainable things we would build in the future. And in that sense, I kind of support them. If people thought of Ethereum as some kind of like playground for when we really have the ability to host distributed applications at scale, what might we build? How might they look? What problems would we run into? Like, that's a great attitude towards Ethereum. To think of it as a fundamental replacement for what Bitcoin is and a solution to anything in the short term, I think it's supporting your bags. It's putting the cart before the horse. It's misunderstanding the complexity of the problem.
Right. So is it fair to say that while some of these altcoin aspirations may have been good in nature and, well-intentioned, the shortcuts they've taken to try and accomplish those render the projects like really brittle and unable to achieve their actual mission?
Yeah, so it's like if you want to spend part of your career working in this area, just know that. Like, okay, that's not for me. I'd rather be just working on Bitcoin and thinking about those cool things. And maybe at some point Unchained becomes successful enough where we can start to meaningfully participate in those higher layers. We're starting to do that with Lightning now, because I think Lightning is finally getting to the point of maturity where like we need to engage with it not as an intellectual exercise or as an aspirational what Bitcoin might be one day, but like literally as part of our business. And that's exciting for me. That's progress for Bitcoin.
Yeah, I agree. I want to touch kind of related to the idea of, Bitcoiners building for a long road ahead and altcoiners sometimes taking shortcuts to build things that aren't quite ready. I want to talk about another thing you mentioned in the Bitcoin stack discussion was marketing, and how there's like a discrepancy in the ways that we communicate between these different communities. Even like Bitcoin is often viewed as this like intangible thing, you said, and it's a bit of an academic thing. It's fringe. It's not the sexy shiny object that everyone's always excited about. That stuff, that vision tends to be brought forth by altcoins, and it's the tangible and sexy problems. But really, what you said in that discussion was that these are actually the same problem. They're just kind of like marketed differently. And I want to get a better sense for why you think that is. Why is there some fundamental reason why Bitcoin needs to be this kind of like, closed off, like the example of the monks, like you're kind of closed off. You're not as loud. You're a little more quiet and reserved. Is there a reason why Bitcoin is that way by nature? And can it or should it ever be loud and exciting and grabbing people's attention in the way that you see, the Web3 or .com or any of these like manias have captured consumers' attention?
Yeah, I'm certainly no marketer, and so it's hard for me to talk about what captures people's attention. But the thing that I do notice is, let's talk about those problems that Ryan and I highlighted in the talk. And there's different ways you could talk about the nature of this problem. That the two that we picked, which I think are most on point for, let's say, Bitcoin and Ethereum or something, or at least maybe war. Ethereum story, it feels always changing for me. But it's the notion of when the money is controlled by a central party, like it breaks the money, and that breaks everything that depends on money, and which is everything. That's a really powerful argument. Again, it's one that I was completely not able to hear when I was younger and hadn't thought about money enough, hadn't been exposed to Bitcoin, some of the writing, some of the thoughts. I was a technologist. I was a tech person, exactly the kind of person that you would expect to get into Ethereum. If I had heard about Ethereum first, I would have been more into Ethereum. I'm certain of that, going back. And the reason is because like the problem that money is bad or whatever is a very like indirect, intangible problem. Like I don't mean that Bitcoin itself is an intangible solution. I mean that the problem that it's trying to solve is pernicious because it's invisible to a lot of people. It's hard to see that problem unless you look for it, unless you try to understand what an alternative kind of money might look and feel like, how it would change incentives, how it would change behaviors at small and huge scales, frankly. That's a hard problem to see. Conversely, the problem that Ethereum, for a big part of its history, and I think to a degree still now, tries to solve is this notion of like a world computer or rebuilding the internet or engaging with technology in a way that seems fairer and more transparent and more human-centered and blah, 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 blah. I claim that that's just a more accessible problem for most people. Like the fact that spam exists or Twitter spam exists or the internet is predatory, like we know these things. Like we know in our bones that when like Amazon Alexa is listening to us, right? It says it's not, but it fucking is, like maybe that's just a paranoid statement, but like the idea that we've become products of these massive centralized companies that take in information from us for extending, a certain degree of value to us, Twitter and Facebook and social media and all the other platforms, like we get value out of those, but we don't pay for them with money. So the incentives get all screwed up. We pay for them in information, which then has to be monetized by those companies in the form of advertising, which is designed to manipulate and corral us. And it's an awkward bargain that we're inside of. But we perceive that. I think all of us perceive that so much more directly than we perceive the issues that are plaguing money. And so I would say that when you go to the public and you say, hey, I'm going to solve that problem that you're familiar with. Oh, by the way, you can get rich off it. That's very compelling. When you say, hey, there's this problem that you don't even know about, that a bunch of Austrian nerds care about, that really causes you to have to rethink a lot of the way the world works. Like that's a very hard sell in comparison to the internet is broken, let's fix the internet. And so I'm just making the claim that, and Ryan and I used the TV show Silicon Valley on HBO is kind of a popular gauge of this attitude. Silicon Valley is like a super smart show. It's like very on point with a lot of technology, with a lot of business, humor and characters. And certainly, I think we all remember some of our favorite characters. Like Russ Hanneman is an incredible 3 of a character, and I love the scenes in which he's in because he is a hilarious character, but also because it's so clear that the authors of that show, the writers, really do understand their audience. Like having Guilfoyle, I'm kind of getting into a Silicon Valley rant here, but this was part of the talk. Y'all can see a longer version of it. There were screenshots. But having Guilfoyle talk about freedom and money and property rights doesn't resonate with the audience nearly as well as having Richard talk about the internet sucks and don't you know it and let's fix that. And I think that was a really perceptive choice by the writers. It's also, whether intentional or not, a perceptive choice by those who are marketing altcoins because it is a more accessible problem. And when you make claims like, hey, we're rebuilding the internet over here, we've got Filecoin and distributed apps and anybody can write any software and it's just a bunch of software all talking to each other, people can sort of convince themselves that that solves the problem. It's harder to do the reasoning required to realize that really it's the economic incentives that solve the problem, and creating really strong, well thought out economic incentives build robust markets, which then efficiently solve resource allocation problems. And a huge part of the internet is resource allocation. It's the allocation of bandwidth, packets, domain names, IP addresses, et cetera, et cetera. It's namespace and resource allocation. Those are great things for markets to solve, and not the way that we currently do it, which is this large centralized tech and media companies essentially solve those problems. And we don't pay for those solutions directly. We kind of get bought and sold on those networks. Reprogramming that is not a technology problem. Like we have technology to do these things. We've had, for example, the ability to build mesh networks for a very long time. What we haven't had is the economic incentives to drive people to take risks to participate in mesh networking, right? In that sense, Bitcoin creates the economic incentive. Like even just the notion that Bitcoin mining as an industry has grown so large that it becomes, I think for important reasons, potentially a concern for people, right? Without knowing more much about this. Oh, that's awesome, right? This thing showed up and got people got people so fired up about it that it became one of the world's most energy intensive industries within 10 or 15 years. That's incredible. If we could incentivize human beings to solve other collective resource allocation problems, like telecommunications, we don't need monopolies of AT&T or Cablevision. We don't need central points for the NSA to monitor our traffic. We obviate a lot of the endemic problems of centrally managed networks with those strong economic incentives. That's just a much more complex idea to swallow than the idea that, hey, these nerds have invented a new kind of code that lets us fix the internet. You can buy some. It's very compelling, very compelling. Mm-hmm. And I'm unsurprised that narrative took off. And I think the only solution that Bitcoiners can offer is, not to change Bitcoin and go after that problem. I don't care about that problem I deeply care about that problem, but I don't want to subvert the implementation by trying to cater to its solution today. I want to communicate again, this is the notion of making these ideas more well known. I want to communicate to the large audience of crypto investors that whatever you think is cool about that altcoin, it's going to get built, like whatever the good part about it is going to get built on Bitcoin in some way, not on the Bitcoin blockchain, but through economic incentives that are anchored in the ability to earn Bitcoin somehow. And that's what you should hope to, that's the sustainable solution. It's probably not coming for a while, but if you at least get on the train now and start buying Bitcoin and being part of the growth of that, you'll participate in all the growth that happens towards that vision or any other vision that you hold dear. I think that's the hard part, is getting people off of superficially profitable, affinity schemes ultimately.
Yeah. And so maybe then to get to the point where everyone is aware and using Bitcoin, understands what it's meant for, and can reason about it better, do you think that that's something that has to come over time? And maybe it's something that is built on a Bitcoin layer above the base blockchain that eventually gets people and captures their attention over time?
I wouldn't be super surprised by that. I think it's, even for a long time from now, I suspect like the idea that you should buy Bitcoin because of its monetary qualities is for the average person, like just it's hard to get there. I think you should buy Bitcoin because it's useful. You can use it for these cool things. Like, for example, this is, I don't know, 5-10 years out. Like, if you have Bitcoin and you get the software, you can just watch anything you want. Like, IP is broken and all movies and TVs. It's like the glory days of your dorm in 1998 or whatever. If you're me, it's like everything. Like, I'm clearly advocating piracy here, basically, but I'm more advocating the notion that piracy will become so inevitable, and that the token of pirates will be Bitcoin, and that will motivate people to create massively effective piracy schemes that will break DRM and put us back into this interesting climate where IP is really not as valuable because distribution has been itself distributed. So if the notion, if it's impossible to defend distribution pathways for IP, then IP itself withers and dies. And I don't think that's a bad thing. I think it means that people have access to more stuff at a lower cost, and that's actually a good thing for most people. It's maybe a bad thing for creators who are used to getting paid a lot for their creations, but I actually think that's a tiny minority of creators. Not everybody's Beyonce. Most people are artists who are getting taken advantage of by distribution and not the other way around. And so I think while the very top end of those who make money from IP will probably suffer here, the average person can probably benefit, because if the model for profit for content creators is no longer like getting locked in with a distribution channel and like charging for that IP, then the model must revert to historically what it was before, which is patronage and being directly paid for performance, for creations, and other things. I just think that's in many ways such a healthier model for compelling art, the creation of really good art in a lot of fields. We're starting to get into compelling, controversial territory perhaps here, because I'm basically advocating piracy and the dissolution of intellectual property and all sorts of crazy ideas. But at the same time, I view these as part of what has to happen if you really want to live in that world computer. And you don't get to just build it today and pretend that it's working. Like, deep changes like this will happen first before those follow-on changes can really occur.
Right. And maybe another example along the same lines of like a new system that introduces Bitcoin to people, because the system is clearly better for them. Maybe that's something like Nostr, where you're seeing people migrate to Nostr who don't even know what Bitcoin is, maybe. And they just kind of like, Bitcoin kind of sneaks in there and says, hey, by the way, this is the currency that we're using to, send zaps back and forth. And, that's kind of how this network works. And if you want this censorship-free platform, then,
Yeah. I like that. I mean, my claim is that almost no altcoin project at all actually achieved that stage. There was almost nothing that has been built that people were using for the reason it was built, if that purpose wasn't itself speculation and financial like arbitrage. So whatever messaging platforms or mesh networking things or real estate property registries or whatever got built in every altcoin that's been launched in the last 10 years, like none of them actually got used for the thing that they were supposed to do. And it was all financialized like speculation. I love the idea that someone could use Nostr not because they're trying to make any money, because they just want to use the platform. That's very compelling. There are criticisms I would have for Nostr, which is that ultimately, in order for something to get to the point where people just want to use it because it works better, it has to work better. And for applications such as Nostr that have no centralized coordinate, like Nostr is not successful if tomorrow someone launches a Nostr company and starts hosting Nostr messages. That's not success. That's failure. For Nostr to be successful, some of the market has to coordinate that kind of behavior. That people have to get paid for hosting, indexing, doing searches on messages, like organize the work that a Twitter-like company does. Someone's got to get paid to do that work. And if they get paid to do that work, and if the economic incentives are correctly designed, then the system will become so robust that it will be a better Twitter than Twitter can ever hope to be. And then people, to your point, will just use it. And just to use it, they'll need Bitcoin, so they'll get some Bitcoin. And maybe this helps bring them to the perspective that Bitcoin is useful to hold just as money. But the argument that Bitcoin is just useful, period, for things in the world, we're almost there. We're not quite there yet. Like, I would say maybe in some areas, like Bitcoin as a way to move money is definitely useful. Like, I know that, cross-border payments and things like that, Bitcoin is definitely the superior technology in a lot of ways already. So it does solve that problem. That's a very close to the money kind of problem. Like, what I love about the Nostr use case is it's very far from money. It's about telecom and it's about data and social media and messaging and human connections. It's ostensibly nothing at all to do with money, yet it's being birthed from the Bitcoin community, more or less. And it's we who are driving it. And ultimately, I think for it to be successful, it's going to have to integrate even better with Bitcoin, with things like Lightning and so on, to incentivize all these additional behaviors that close the gap between Nostr and a real platform like a Twitter. But that's just an awesome thing to happen, right? But that's going to take years because Nostr isn't a company. It's a bunch of people doing a thing that no one's in charge of. So, like, for us to figure out all the patterns that create these efficient economic incentives will require all sorts of discovery and experimentation and mistakes, which is great. Like, let's do it.
Yeah, one of the next parts of your talk was building in layers, and you kind of talked about, you had a slide that highlighted, the different layers of Bitcoin and the different layers of the internet and things like that. And, the way you set it out was like blockchains, layer 1, Lightning's layer 2, distributed markets, layer 3, and I think there was a Urbit and a question mark for layer 4. You talk about distributed markets on Nostr as well, and being able to have a set of distributed participants that can guide consensus and make decisions, not just one company. Can you elaborate on, and I think one other point you made in that discussion was that Bitcoin at the base layer has a set of distributed markets to govern the blockchain. There's distributed, the mempool and the fees and the miners, and they're all distributed reasonably well. And you had kind of urged people to let's try and export this to other layers.
I would say that's the main kind of idea, right? Is that what makes Bitcoin compelling at layer 1 is the idea that it isn't centralized in any way, that every aspect of it is distributed. In particular, it's distributed through market forces. The reason miners mine is because they're incentivized to earn Bitcoin. The reason hodlers hold is because Bitcoin is worth more in buying power in real terms every year, more or less. And this is what's compelling about Bitcoin. We're not being forced to use it. We're opting in to use it, and it's growing in value, and it's creating a really strong, robust industry around it because because that economic incentive is so powerful, because it's very good money. What I think is interesting is that the market that Satoshi created around blocks, or I think in the talk Ryan and I describe it as kind of an auction or bidding process, that there's proof of work attempts by miners, or in some sense bids or auction tickets to try to win the block. And so it's very much a market-driven order creation and settlement process. I think what's interesting is that in order to build the market, whose goal ostensibly was to be able to support Bitcoin, the currency, Satoshi had to reach for interesting adjacent concept areas and solve other kinds of problems. So in particular, to build this digital money, Satoshi had to use real-world energy. That there was no solution that they could come up with that could solve the need to pick a random person or entity to produce the block, which is required for security. You shouldn't be able to predict who's going to create a block, and for it also to be unreplicable easily, but easily verifiable. All those things were met by proof of work. And it turns out that Bitcoin having deep connections to energy, I think, is super important for Bitcoin's long-term success. Even in my crazy space speculations, I've written about the fact that Bitcoin is so deeply connected to energy can actually be a societal, lever that pushes us upwards, up through the Kardashev scale. So there's some crazy heady ideas in there. But I think it's interesting that I don't know that Satoshi set out to connect to energy markets in a deep way, but it's compelling to me that in trying to build money, they had to solve that problem. Similarly, they have to solve a timekeeping problem that Bitcoin is often talked about, like it's time. Gigi's awesome article, Bitcoin is Time, the difficulty rebalancing. These are distributed timekeeping algorithms. Why do they work? They work because Bitcoin is valuable. Like the testnet does not maintain like 10-minute blocks. And the reason it doesn't maintain 10-minute blocks is because the economic incentives on the Bitcoin testnet aren't real. And so blocks will occasionally hugely oscillate in rate of production from coming many, many per second when someone puts on a whole bunch of testnet hash rates to test something, and then difficulty readjustment triggers, and then they take it off a few hours later, and now it takes hours between blocks suddenly. So is testnet a functional blockchain? No, because the economic incentives break the exact same rules, exact same cryptography, but it breaks down because the social consensus around the value of the tokens is nil. And so the incentives aren't real and it doesn't work. And I think it's interesting that Satoshi, the market that Satoshi built that defines the way Bitcoin operates at layer one, had to connect to these concepts of energy and solve problems around timekeeping just to make the money. That's super interesting to me. That pattern reoccurs at higher layers. Lightning is ostensibly trying to solve a financial problem of how do we get rapid payments to occur on the Bitcoin network because they don't work very rapidly. It's not ergonomic or convenient to do that at layer one. So can we build a second layer that has that property? I find it super interesting that in order to solve that problem, what did Lightning have to do? It has to build a peer-to-peer telecommunications network between all the actors in the Lightning network. They have to be connected. Now, of course, that's happening on the internet. Like they're doing that communication through the internet today. But Lightning had to figure out its own internal routing technology, right? It uses onion routing, but like it's a mini internet. Like effectively, that's what Lightning Network had to build. So you wanted to solve a payments problem, but you wound up building a telecommunications network. That's totally fascinating. And to me, these are not conditional things. Like there was a different way to build Bitcoin that didn't require energy and thinking about timekeeping. There was a different way to build Lightning Network that didn't have us solving problems around networking and routing. I think these were they had to be there. These were the proximate problems. I think this is start to touch on space ideas, but if aliens were to invent Bitcoin or some similar tool to figure out how to do digital resource allocation and transfer, like in an adversarial context, like they have a society like ours, they would find that energy and timekeeping are parts of the solution. And I think if they then went on to be like, this fucking slow, like we need to figure out how to make this faster, they would find that they're compelled to build some kind of internal network. And that's exactly what we are doing, where Lightning is solving problems of telecommunications and networking in an attempt to solve a payment liquidity problem. I think that's cool. And then what will happen at higher layers? Like we're trying to solve a given problem, but we will encounter these other problems that are important for us to solve. And we didn't maybe even realize that those problems were part of it until we attempted to build that layer. But once you see that and you realize Lightning has to solve networking problems, you sort of realize that, okay, it's not just a payment system. It really is the beginnings of a metered, economically incentivized telecommunications network. Like it's the kind of thing that we can, if we build the right incentives, if we, as developers, like launch companies and projects to like grow different parts of this, we can collectively make money by rebuilding the internet as a society. And that will be successful and robust because we don't have to regulate people to fix the internet. We don't have to do GDPR and things like this to like force good behavior. We don't have to, I have a whole rant about computer security and how Bitcoin internet fixes that. But like ultimately we ourselves, just by our selfishness and desire to make money, get motivated to build a better internet. And that's very cool. Like that wasn't, I don't think at the outset, the marketed goal of the Lightning Network, but I guarantee that people who are actually building the Lightning Network were thinking about that. They could see that. There's a reason that things like Sphinx Chat are able to be built so quickly after the Lightning Network starts to get some traction, because they're just plugging into the expectations that as designers and developers, people who built the Lightning Network knew would likely occur. It would become itself a basis for the settlement of other things, even though it is itself a layer that is settling back to Bitcoin. That's something that sort of, again, was known but not widely understood. And now things like Sphinx Chat show up, and you're kind of doing semantic data transfer through Lightning payments. And I don't think Nostr is quite there, but a lot of people see those connections as inevitable, like not surprising to me, because of course you would choose to use, if your goal is to create economic incentives for better social networking applications, of course you would use an inherently monetized form of telecommunications, one that doesn't suffer from all the problems of trying to deploy a social app to the traditional internet.
I hope you're enjoying the show so far. Just a quick message from our sponsor, Voltage. Voltage empowers engineers to integrate Bitcoin and Lightning Network payments into their business stack with an enterprise-grade experience. The team at Voltage is building the complete toolset so that you can do more than simply spin up nodes, but also understand and interpret your node's data. Their new product Surge gives engineers the capability to quickly solve problems and optimize operations. With node insights and visibility through time series data, you get dynamic and complex insights never available before. You can get complete control with insanely fast onboarding, advanced client-side encryption, and zero management infrastructure, making backups, networking, and upgrades simple. Get a free 7-day trial today at voltage.cloud. Now, given that Lightning is a layer 2, it's on top of the blockchain, how important is the distributed part of the distributed markets? Is it okay that there is some centralization on the Lightning Network? I'd actually love to hear your views on the state of centralization in the Lightning Network. And is there a point at which too much centralization can jeopardize either the success of the Lightning Network or the success of Bitcoin?
Yeah, 100%. Let's start at the end of that last question. Yes, I agree. If Bitcoin becomes one company doing all the mining or one nation state doing it, yeah, we've already failed. It's captured. If Lightning becomes one giant hub that everyone else in the world connects to, we just built Visa. That's all we did. It's important that we distribute the both physical as well as incentive structure and architecture of that network. But I think what's cool about economic incentives is they sort of create that distribution. Like a lot of times these centralized monopolies exist because ultimately of inefficiencies in markets, right? Like the fact that regulations create blockades for new entrants, or that the economies of scale allow large companies to inhibit innovation or curtail it by like purchasing it and then squashing it in some ways, right? Like cost of entry in these markets becomes so high. That's another key important aspect of Bitcoin and why it succeeded. It wasn't just that it was a market, it was a very open and easy to enter market, one that you literally can't keep people out of. All you need is an internet connection and a computer, and you can make money from Bitcoin. These days you need an ASIC, whatever. But like with Lightning, you don't even need an ASIC. In theory, you just need a computer and an internet connection. But you do need Bitcoin liquidity, right? So there's another resource now that you have to bring to bear. But Bitcoin is something that anybody can get access to. So again, it's a very open market. It's very hard to prevent somebody from competing with you on the Lightning Network. And I think, frankly, one of the cool things about Bitcoin is even if you get a certain degree of centralization around, let's say, white label or white market usages, you're going to have black market usage. That's going to drive other parts of the network. Like that's true in Bitcoin. Like you have exchanges that are mostly white label that are going to issue you tax forms that are plugged in with your real world identity. And you had, at least up until recently, you had things like local Bitcoins. And you continue to have things like BISC and other forms of peer-to-peer exchange. I think similarly, at the Lightning Network level, like even if there is, let's say, one hub or many major hubs that collectively like are what most things are connected to, right? So when you go down the street and you buy something at the pharmacy and you do it with Lightning, like they're probably using a very similar hub to the one that you use at home or whatever else it is. But just because of the fact that that's all becomes one large connected component in the Lightning Network, and folks would have worries around, let's say, whether it's criminal activity, whether they're just privacy conscious or whatever else it is, there should exist like settlement paths in the Lightning Network that are higher cost, but offer different aspects. Like you don't have to authenticate, like you're not like, they'll move your money without knowing who you are, et cetera. Maybe you're paying more for that because like that is a more valuable service maybe in ways, but because you can't prevent someone from building that thing, it'll get built. I think also importantly, let's remember, you and I, Kevin, can just build a Lightning channel between us, independent of whatever else is happening in the world. And that is completely distributed, disconnected from everything else in the network, private channel just between us. No one knows how many of those channels exist. We can kind of measure it from L1 data, but like there could be a lot of those out there that people are using, and that is a form of distribution. Pairwise distribution is still distribution and settlement, I would say.
Fair enough. And then as we proceed higher up in layers, does that relationship change between the amount of distribution you need in a market to call it a success? Does layer 3 and layer 4 have to be as distributed as layer 1 and 2?
I don't know. I mean, these are like super interesting, compelling questions. Like today, in my head, layer 3 and 4 have something to do with serving data, like on top of the Lightning Network, as well as application code and running application code. So they're essentially an attempt at the world computer, right? Giving developers an ability to literally take code and just deploy it into the world somehow, and it just runs. It doesn't run magically, you're still paying for it, right? In that sense, it's the cloud computing model, but you're not paying a centralized provider like Amazon with one of 40 data centers globally where this workload will run. You're paying some market that has shared protocols and strong economic incentives behind it. The shared protocol part is sort of easy because like that's been the history of infrastructure online for the last 20 years, is getting to ever more elegant shared protocols. Like I won't say Kubernetes is elegant, but increasingly things like containerization are bringing us to a point where it's easy to transfer workloads between different providers. But those providers are still usually centralized players. Like there have been attempts again in altcoin land, things like Filecoin, Storage, a few other projects of like trying to do file storage and computing and other things like that, just like through smart contracts on layer 1 in the Ethereum blockchain. And that alone is why stuff like that will not scale in that given implementation. But the need behind it, the notion that like, hey, why can't I just plug in a bunch of my machines and start serving files to my neighborhood and getting paid for it? I think that's completely realistic. People, I think, tend to assume that mesh networks are really bad in terms of performance, and to a degree they are, but only if you expect them to run the same kind of workloads that centrally managed networks run. Like if, like for example, I watch a TV show and how do I get that TV show? The data files are delivered to me from some CDN, content delivery network, right? That delivery network has a bunch of nodes around the world that they push data to the edge of their network. How do you get your data into that network? You're paying them, right? So Netflix or whomever the content provider is paying these delivery networks to like take this data and replicate it in a bunch of places to the edge of the network. But they're doing that all before they know anyone's going to watch the show. Right, all of that has to be set up in advance and ready to go so that when you connect, immediately you get like the bytes over it and it's instant. And then when your neighbor connects, even if the bytes were just sent to you or being sent to you right now, when your neighbor in like the unit above you like watches the exact same show at the exact same time because Last of Us just came out on Sunday night or whatever it is, the bytes are still coming from the CDN. It's in many ways inefficient, right? The right structure for mesh networking for data like this is something closer to you wanted to see those bytes, so somehow you put out requests bidding for, like, I'll pay up to X for these bytes, here's my time and SAT preferences, et cetera, and someone is delivering you those bytes at whatever thing and if your neighbor decides to start watching The Last of Us like a minute later, maybe it's a little cheaper for them because at this point you will just sell them those bytes. Like they're already at your house, now they just have to go upstairs. How do you build hyper efficient edge systems like that? Like you use market incentives. You make it so that humans are motivated to engage in those kinds of microtransactions at the edge through meshing with their peers. Like systems like Uber are ultimately that, but for human transport, right? And again, they're always coordinated by bringing all the data from the edge back to the center, doing order matching there, and then pushing everything back out to the edge. A mesh network can be more efficient if all those transactions are actually executed at the edge instead of having to come back to the middle all the time. The only way we build things like that is through technology that distributes the economic incentives so that the requests can be fulfilled right at the edge because someone was motivated to do that. And I think ultimately this will lead to an interesting behavior where it's like, if you're in a remote area, like you may not have those bytes at the same cost, at the same availability. And that's just the market. And if you would like to fix that, you can start buying hardware and infrastructure and putting it in your mountain cabin and trying to make sats from, being a local cache node for whatever data market transactions the local, zip code in your mountain neighborhood, whatever wants to watch or consume. I think that's a really powerful, cool way to get economically a sense of arbitrage, right? That like infrastructure will be built where it's profitable to build it, and we will converge towards more or less like a reasonable curve in terms of people's willingness to spend and the infrastructure that's actually deployed where they're at.
Right. And then it can just inherit Bitcoin and Lightning payments as needed to fulfill those economic incentives that you outlined.
Yeah, exactly right. And the point is, you don't have to think about it very much as the person deploying this stuff. In much the same way that, like, at least with mining at this point, you're not. I don't want to trivialize mining. You're doing a lot of logistical managing, but you're not thinking about like the actual mining process. Like the software just doing the thing for you, right? And I think with the Lightning Network, similarly, like we're at the point where to be a Lightning node operator today, you're doing a lot of work. You're doing a lot of channel maintenance, and you're figuring out what to do. But we're not too far away from software which just figures that out for you and delivers a pretty reasonable managed node experience. And taking the decision making out of that, so it's much easier for anybody who wants to make money from just being a Lightning node to do that. And that's required, right? Because we have to lower the bar to entry into the marketplace in order to create distribution. And the fact that you can make money is what drives growth in the first place. And so we've got to achieve both things. I think today, Lightning growth, the network overall growth is less than it could be because it's still very challenging to run a Lightning node. As that becomes easier, the network will grow more quickly because it'll be a reasonable way for you to earn sats.
Yeah, I see. So your view on Lightning then is that an automated system for routing could lower maybe the routing fees that nodes earn, also making it easier though for anyone to spin up a routing node because now they don't have to do all this channel maintenance, and ideally that comes in the form of some shared protocol. Is that your view?
Which hasn't been developed or figured out yet, and that's part of what's ahead of us as a community to get on top of. But yeah, routing in particular is super interesting. I think routing, it's underappreciated how valuable a Lightning route is. A known route between two nodes in the Lightning network with sufficient liquidity to actually route payments, and knowing the full set of such routes between all nodes, that's a very valuable data set. Today, we're kind of like in the early days of the internet where you could just scrape the whole internet and like have a global view of what the network looks like and be able to do order matching. In the real version of the Lightning Network, when it's orders of magnitude larger than today, I don't think any entity will ever have like the full network picture. For many of the reasons we were talking about previously, there will be disconnected components, there'll be private channels, but just for reasons of scale, it'll be hard for one entity to have a full picture of the whole network. And at that point, routes become actually something that's valuable. You don't share your routes with other people. You use trampoline payments and other things like that so that you can service someone's economic need to route payments or data without having to tell them the route, because that is your operational advantage. That your software or your business, your Lightning node stack, whatever you sell or operate, is really good at discovering routes and leveraging routes to create the cheapest payment options for users of the network. And I think today we're still in this fun, friendly world where everyone just shares routes with each other and like it's fine, it's no big deal. There's not that much money being made right now. Like as the network grows in absolute terms larger, that data will become more valuable and we won't share it as much. To a degree, this is kind of like in the early days of Bitcoin transactions could be sent with zero fees and they would still confirm. Like there just wasn't enough usage for people to be very adversarial and like and greedy. As usage increases, like no one confirms zero fee transactions today. Like that just won't happen. Like you have to participate economically in order to do this. And I think similarly, like we'll see that in the Lightning Network, that today we're in this era where like, I'll just share my routing table with you more or less, like to use more networking terms. I don't think that's how it works in the future. I think we start to guard that data because knowing all the routes is how you make money.
So now if we combine all these effects of, lowering the cost of running a routing node, automating channel management, having more nodes on the network, not necessarily all sharing their information,
having more liquidity,
what are the follow-on effects of that? What does that lead to? If you kind of squint out into the future, how does the fee ecosystem evolve on Lightning? On average, are we talking about more large hubs? We have, I think today, about 46% of public capacity is tied to exchange nodes on the Lightning Network. Is that number go up? Do exchanges start to actually earn meaningful revenue from routing payments?
I think yes to the second question. In terms of the overall degree of distribution versus centralization, I don't know how that plays. I don't know what's healthy. I don't know that we know how to measure that. It's not like it doesn't have to be that every single human has to run a Lightning node in order for the network to be healthy. And like, I think there's a fantasy among some Bitcoiners that we're all going to run our own nodes. We're all going to run every. I just don't think that's necessary nor required. There's
Just like
certain
mining.
kind of, yeah, like there's someone has to provide the service at a sufficiently good level for everyone in the network to benefit, and that's what we need. Um, Importantly, it has to be at the same time, as we discussed earlier. It can't just be a really excellent central node operator who provides Lightning payments for the whole world, because we've just made Visa now. So there has to be some intermediate like place. I don't know what is healthy. I don't know that 40% of all Lightning payments going through one hub or one set of hubs operated by similar kinds of businesses is necessarily bad today or even in the future. I think it just depends on the overall scale of the network and what's easy versus what's hard. To a degree, I think if that works and supports everything else that is then built on top of Lightning, well, then it probably works. If it fails to support the kinds of things that people want to build on Lightning, like these crazy data marketplace ideas we were just talking about, well, then it will fail, and then people will build different structures because they are trying to achieve those outcomes. So I think this is part of
Right.
the inherent competition here. Personally, of course, I would like to see more distribution. I would like to see lots of small businesses and other places. I think there's a trend, like you might imagine, like a small business puts up some solar panels and then like is selling some energy back to the grid kind of thing. Like that's increasingly common today, even though grids inevitably pay you a pittance for the energy you sell back to them and whatever. I don't think that's a crazy idea that like if you have any kind of modest footprint, like maybe you have the ability to make energy, you have the ability to do a little bit of Bitcoin mining to produce heat, if nothing else, to heat the space. Maybe you're also, whatever Bitcoin you have that you're using Lightning, where you're all recycling it in some kind of liquidity thing. Maybe you're hosting some data files. Like, and all this doesn't have to be like the thing you think a lot about. Like, you might just have like a room in your house that like does this shit. You don't go in there very often. Like a utility
Right.
closet that has your like breaker panel or something like that. It's like it's deeply important that it works correctly for you to feel comfortable in your home and for everything to just work normally. But most homeowners don't know much about how that stuff works. It just kind of works. And it involves money, energy, telecommunication. All those things are still happening, right? And we just don't, they just work a particular way. I'm just arguing that they could work in a totally different way. It doesn't require most human beings to suddenly become experts on Lightning liquidity or telecommunications mesh networking. It just means that products have been built to allow people to plug in and make or not make or spend less or spend more in some scheme.
Right. And then the example of the energy, like if I have a solar panel and I'm, selling that, instead of selling it back to the grid, I may be selling it for Bitcoin to a neighbor. And if I don't have to transmit it as far, all of a sudden more
Right.
energy can get through, and you can kind
Right.
of reshape the
It's the same
energy
mesh
market.
networking example, except the challenge there, right, is because energy is so physical, like there are lots of regulations in place to prevent me from just running a pipe of, like a conduit with some wire from my house to my neighbor's house or whatever, right? Like the systems are not built for like that to be the peering model of how energy moves around. What's cool about applying, and that's why, as much as Bitcoin is changing energy markets meaningfully, that's not the change that's happening. The change is more on the production side at the moment, with Bitcoin as more like an economic battery. But it's easier to make those sorts of peer-to-peer wiring choices on the internet, because on the internet, like if I want to connect to my neighbor, it's way easier to make that pipe and connect that pipe than it is to physically move electrons, like
Hmm.
in high power conduit. So the notion that distributed technologies like Bitcoin, like the Lightning Network, the economic incentives that they create, can create stronger peering relationships within communities and just amongst people. I think it starts with the digital sphere, but maybe interestingly, like the physical sphere can then, after coming decades, like mirror some of that. If we're kind of used to the
Right.
idea that like, dude, I sell my neighbor who I don't even know liquidity and bytes and bandwidth all the time. Like, why can't I just route some energy over there? I just installed a cool hydro generator or whatever it is. Like, that will become an easier and more normal conversation than I think it is today.
I see. So yeah, once it's become consensus in one domain in the internet world, all of a sudden the pitch to rethink how physical infrastructure is set up becomes so much easier. And it wouldn't be immediately obvious today, right? You couldn't do it today. You can't shortcut that step, right? Is that what you're saying?
And I think that's kind of what, and everything kind of goes together too, right? Like it's not just that we do something digitally and so now we know how to do it physically. It's that energy technology also has to change. Like just the notion that Bitcoin drives sustainable energy technology in a deep way also helps here, right? Because if solar panels become cheaper and technology for green energy becomes cheaper, then it becomes easier to do this kind of peering model. Um, to a degree, I think this stuff it's all time based. Things like 3D printing. like, and are a big part of this as well, right? Like the notion that we could change the centralization model of manufacturing so that it's resources are shipped from one place to a manufacturing location, made, and then again shipped back to us. Can resources just from our area, like atoms I'm talking about, like can we just use those atoms to make things right here and skip the whole sending it 3 times around the globe like aspect? That's a very Bitcoin idea in some ways. Like it's got elements of self-sufficiency, it's got elements of marketplaces and local autonomy and all those ideas, but it's unrealistic without the core technologies. And so Bitcoin as a pattern for how peer-to-peer marketplaces and distributed economic incentives can work, I think is one leg of this, but it connects to other legs of the overall story of human distribution over the coming decades, right? It's connected to 3D printing, it's connected to energy technology, it's connected to mesh networking and other kinds of notions. I mean, to agree, I think this is like almost like a philosophical just pendulum. Like there's like this pendulum that swings in history between distribution and centralization. And I think it swung real hard over the 20th century, certainly towards centralization, like superpowers, world wars, global corporations. I'm not trying to be conspiratorial about it. I think to a degree those things were necessary. I don't know that we have semiconductors without the combination of those kinds of things. And we need semiconductors in order to be able to build Bitcoin and build ASICs and do all this kind of stuff. But maybe it's just a transition we're going through as a species. We swung really hard towards centralization. We got all these technologies in place, and now we're having, I think, in many places, severe reactions towards central control. And you're seeing that in Bitcoin, in politics, in technology, in a lot of ways. Bitcoin is as much part of the world, I think, as it is an agent of change in the world. And sometimes as Bitcoiners, we want to pretend that we're like the be all end all of what change means and everything, comes out of Bitcoin and that nothing else matters in the world. But I just don't think that's true. I think energy technology and mesh networking and 3D printing and even space exploration, all these things connect. Like we're in an age of increasing distribution, and Bitcoin is a core part of that story. Totally agree. It's arguably maybe even the fabric that connects it all, right? Because it's where the economic incentives that drive those distributed structures are programmed. But I don't know. It's a bigger story.
Right. That's fascinating. I like that idea of a pendulum swinging back and forth between centralization and decentralization, because I think there is a school of thought on Twitter, and a lot of Bitcoiners will say, they're pro decentralization, they're in favor of decentralization, and there's kind of this idea that once we get decentralization, we're done and like we win and it's like game over. But you're suggesting no, this is like all part of, we're going to continually move back and forth along this pendulum, right?
I think in the longest time spans, like I think so. Maybe there's part of it is just like because like Bitcoin itself, no one's really in charge of the human project, right? We're all just monkeys running around over here, so we don't have. If there was a theoretical place for this pendulum to balance, very hard to get it to balance there. The more likely modus of history, it feels like to me, is constant overcorrection and then having to go back, right? Building empires and then turning into a series of squabbling city-states for 500 years, and then empire shows up again. I think this is just part of, I don't know, entropy, structure, creation, formation. Like nothing lives forever. Things grow and dissolve. I think this is just part of the world. And we are exiting a period, I think, of extreme centralization, and the pendulum is swinging back towards decentralization. I think it'll swing right back here at some point because, I don't know, 500 years from now, people will say, the good old days of empire or whatever, something will happen. I don't know. It just feels like I don't view human history as teleological as perhaps some people do. It's not like always towards progress. It's change is constant, but I think there's just a lot of back and forth. And in the presence of, continuously changing technology environments and so on. So I just think we're part of a big trend here, driving it as well, but like part of it as well.
Yeah. Do you see like in the last 500 years, it seems like we've had a lot of progress, and, maybe now we're saying to ourselves, we've gone too far in the direction of centralization. But if we look at this like last era of human history, we did a lot of stuff.
Yeah, no, it was
and
great.
Now when we swing back, do you see the progress changing? Do you think humanity will have a similar level of progress in a different way? Will we see more progress? Will we see reversion? Will we see less progress?
Progress is to me, we're starting to get really philosophical here, which is totally fine. I think progress to me is really charged because, like, what does it mean? Like, this is progress for some justify a lack of progress or moving backwards for others? Is progress in some domains of our lives? Like the notion that a poor person, a relatively poor person today in modern society, can have like a cell phone or smartphone that is like connected to the world's information, and in that sense is fantastically richer than any historical king or ruler or something like that. But yet, even a wealthy person today might feel like they just have no control over their time and no control over their life. Like, have we made progress? I think the answer has to be yes. Like, there's extreme progress that we've made in terms of things like, I would say, broadly human rights and healthcare, knowledge. Maybe there are ways that we haven't made as much progress as we'd like. And I think when you ask about, as this pendulum swings back towards decentralization or distribution, what will progress look like? Again, I don't know. My hope is that we continue to feel like we're making progress on the human project. That life is getting better on average for all people, most of the time. But at the same time, like, change is unpredictable. I don't want to have like rose-colored glasses on and pretend that like the dissolution of the dollar as a global currency and its replacement by Bitcoin is not going to have some losers in it. It's not going to have some pain that it causes, and it's not going to have some violence that it engenders. I think change always comes with ugly pieces, and I don't think it's unidirectional. I think Bitcoin, for example, is fantastically more concentrated in its ownership than dollars are. Like, dollars are very unequally distributed, but Bitcoin is more unequally distributed today. As Bitcoin grows in value, will it retain that greater degree of inequality? Will it become more equitably distributed? Will we have to go through a period where there are like Bitcoin robber barons and we're in some new gilded age? I can't predict like that. I know it's not everything is just going to be better. Bitcoin fixes everything. I don't believe that. Or at least if Bitcoin fixes everything, it does it on a sufficiently long time scale where there's a lot of pain and difficulty on the way towards that solution.
Yeah, I think that's a healthy perspective, and I appreciate that because again, going back to Twitter, like I think a lot of the themes that Bitcoiners like to talk about is how we're all going to live in this Bitcoin citadel. We're going to have castles on the hill, and we're going to be the kings. And they just kind of forget about everyone else. But really, there's a lot of variables at play here, and there will be winners and losers, and maybe the ones who think they're winners at the earliest stage actually end up being losers and vice versa. And I think it's a very healthy thing to think about. But I agree. There's so many variables. It's very hard to
I understand that
conceptualize.
attitude though from Bitcoiners. Sometimes it's like if you feel like you've been maligned or not taken seriously, and you start to feel like you're having some success, that Bitcoin is up, meaningfully the way as compared to like many years ago. It can be really what's the right word? It can be tempting to sort of fall into this like, fuck you, I was right, I'm gonna get mine, y'all can eat it, like I won. I get that. But it's not how I choose to be. I think there's a lot of Bitcoiners that aren't that way. There's a lot of them who are like, well, if I've had fortune and if I saw this earlier and I've booked some gains and my life is better, like I got to do something with this. I got to like tell more people about Bitcoin. I got to get a podcast. I got to talk to my neighbor. I got to start a company. I got to start investing. It doesn't even have to be in Bitcoin. I got to make the world better because of good fortune that I've received. I think that's a just as common attitude amongst Bitcoiners, and that's the attitude I prefer. And it makes me really happy to see a group of people who can take wealth and good fortune and try to multiply it, as compared to try to just hang on to it.
Yeah, I agree. Well said. I want to jump back into lightning specific discussion. I really enjoyed that segment, but I have a question for you about Tor, because this was a topic you brought up in the Bitcoin Stack
That's
discussion.
right.
And, you also have talked about how Lightning is a layer for data transmission and not just for payments. It can be for payments too. But, and I see this like issue unfolding with Tor where I think over the last 6 or 8 months, it's constantly had DDoS issues. It's been very unreliable. Lightning node operators prefer to not even interact with Tor nodes, and it seems like there's a space for Lightning payments to come in and fix this.
And
And I'm trying to understand why that is
It's
not
the
the case
incentive
today.
problem, right? It's the incentive problem that we talked about. It's like no one gets paid to run Tor nodes, which is I think a point that we made in the talk. If you got paid to run a Tor node, there would be a lot more Tor nodes, and I think that's the argument that Lightning has in favor of it. I think what Ryan and I tried to outline was a little bit like Tor is an older technology than Bitcoin, but it has fewer users than, or has slightly more, maybe fewer at this point, users than Lightning, and Lightning is a minority technology even in Bitcoin. So the notion that like Tor is a successful project, like yeah, Tor is a successful project. It's got millions of users and it's very old and very developed. It's also unsuccessful, right? The notion of exit node compromise or various ways in which the network can be monitored by central players who can simply, because of its non-monetary nature, acquire a sufficient number of Tor exit nodes to be able to de-anonymize traffic. These kinds of concerns shouldn't apply in a network that can grow as fast as the Lightning Network can grow because no centralized party can keep up with that kind of growth. It's kind of like saying, well, what if someone were to acquire 51% of the hash rate? Well, who's going to acquire that? Like, what nation state at this point is going to put that much money into do, and then use that power to not just mine Bitcoin, right? Having made that investment. So a little bit, I think about it that way.
Yeah. I wonder if there's a place for something like Nostr to be an intermediary here and say, people start to run paid Nostr relays. That's becoming a thing now. Maybe that is like a stepping stone in the direction of
It
we're going to
is,
have a
yeah.
browser
I think it
that's
has to
paid.
be, and I like seeing that because one of my worries, a worry that I would have about the Nostr ecosystem developing is that it doesn't sufficiently plug into economic incentives and then dies or gets compromised through someone building, as I said earlier, a Nostr.io, right? Like sign up for your Nostr account here. We'll keep the keys for you. Awesome messaging app. Like we added emojis and you've just recapitulated now and built the same old central social media tools. And you might say that this is better because look, it's an open protocol behind the scenes. And well, okay, cool. But like the fact that Nostr is an open protocol, I don't think is what's so compelling about it. It's the idea that it's adjacent through community, through design, through individuals to Bitcoin and to the Lightning Network. And it's not sufficiently well connected yet, but it's only through a deeper connection to real economic incentives that we can solve those problems, like making Nostr scale to 1 billion concurrent users. That's just a challenging technology problem. You need a lot of servers to be able to do that. I don't know if you've heard of like the C10K problem, but it's like a rule of thumb for web servers, at least it used to be. I'm showing my age here. But like you want to support 10,000 users, you're going to need at least one web server. Like you want 20,000 users, you're going to need two now. So there's a certain degree of just like as the more number of active users in the platform increases, you just need more endpoints to like talk to them to serve them data. How do we make sure the Nostr network continues to scale with potential demand without scaling using the tried and true method of getting VC dollars to go buy Amazon resources and expose them to end users, right? That will work, but it will also fail long term. So how do we get Nostr to scale without that, like to scale through just direct market action? Like people got to get paid to run Nostr relays. They got to get paid to index Nostr messages and to serve queries against those indices. They got to get paid to create reputational systems within Nostr so you can find the right people. They got to create directories so you can browse Nostr public and private keys. And none of these should be happening in a centralized way. Somehow, even the assembling of the directory has to be something that's distributed. And this, to me, is an important issue in the layering problem because it's really the issue of like software design and boundaries, right? Like when there's a famous story of like when Bitcoin was first created, the Bitcoin client, it had like this putative like marketplace and like in theory you could like list stuff for sale directly through Bitcoin and all of that was shut down because like God bless Satoshi, that wasn't good software engineering. I don't think Satoshi was a software engineer, and that's okay. They were a brilliant original thinker. It took a lot of software engineers to come into Bitcoin subsequently and shut down bad ideas like that. And I think if Nostr grows with bad boundaries and people start to put the wrong things into it, and it's going to fail. If conversely, it finds the right API connections to layers below it and adjacent to it, it may succeed. So maybe examples there are, I don't think it's, for example, Nostr's job to optimize the delivery of bytes across a telecommunications network and to incentivize that properly. That's a Lightning Network concern. The Lightning Network is, as we said, a kind of a private monetized internet. Nostr shouldn't have to solve routing issues. it might wind up. And this is often what happens, I think, when you're synthesizing systems. Someone from the Nostr team working on Nostr might make significant contributions to routing in Lightning because they were trying to make Nostr better. So in this sense, things at higher layers create demand pull for things at lower layers. I think Bitcoin became better because people wanted to build a Lightning network. I think that's where SegWit comes from. It's a great solution to transaction malleability as well as an upgrade for a layer one in meaningful ways. And we wouldn't have SegWit in the way that we had it if we hadn't been thinking about the Lightning Network at some level at the same time. Because the Lightning Network doesn't work without SegWit. Transaction malleability is a killer. Similarly here, like if we want to build Nostr, we need Lightning to do things for us. And so the existence of Nostr as a ambition, or the notion that we would have applications that work like Nostr, doesn't have to be Nostr, obviously, it could be anything like that. The notion that there's an application set of concerns and that they want to push things like routing and connectivity and bandwidth and stuff into a Lightning layer, and they want to handle things like, well, I know you tell me how to get to data. I'll tell you what data I want. I want this Nostr message with this ID or whatever it is. Like that is the concern of the application layer. Again, this may bleed a little bit in the short term as people try to solve problems just in their own project as compared to trying to do it through a layered model, but that's just growing pains. Like eventually it has to look like something that's become separated in meaningfully distinct layers that solve different kinds of problems, right? Bitcoin's only problem that it has to solve is keeping the money like safe and working. Lightning's problem is liquidity, routing, bandwidth, telecom. Nostr's problem is discoverability, searching, like feed generation. Like in some sense, these are subcomponents of what a thing like Twitter does. And I think that's part of what we will expect to see as these layers develop is you take a company like a Twitter or an Uber or something that does a very complex service. And instead of just building Uber as a smart contract or building Twitter as a smart contract, which would sort of be the ETH approach to this, I think, to a degree, it's like you break it up into all the submarkets. Like there should be a market for just moving data on the internet. That's Lightning. There should be a market for posting a file that you want to be able to retrieve later and being able to have guarantees that it will be around later for you to retrieve it. That's content delivery. That's CDN. That's a requirement to be able to publish software on the internet. Those things are separate, and those have to be separate layers that solve and tackle those problems. Building something that sort of miscegenates all this junk together and tries to just build Twitter as like a project using Bitcoin, I think fails. Like you need to first build all those subsequent layers. Like, and then what's cool about that is like, then those services, it's like inside out almost, right? Like right now, if you go to Twitter, Facebook, Reddit, whatever, go to a bunch of social media networks, they all have their own internal tools for like creating search indices and serving search requests, creating feeds and curating what goes into your feed. There isn't, for example, a cross social media search indexing service that just all social media posts go into and then you serve search requests out of that. Because it doesn't make sense. Who would build that? Who's going to make money from that? Like the individual company has to build a siloed version of that thing. And okay, to a degree, there are cross-functional search things that are designed for ad tech and whatever else, but that does not surface to the end user. In a marketplace-driven version of this, like the way you build an app is you plug into a search indexing service, you plug into a CDN service, you plug into a different kind of thing, and together they sort of implement your app. It's sort of an inside-out approach to software engineering. Instead of a company and project having internal versions of all these common functions, those functions are just marketplace functions. And that your app or protocol is just leveraging existing marketplaces for searching, for search indexing and querying, for data retrieval, for running compute cycles, like something like a feed, for example. This is a great example of what is a feed actually. It's an algorithm, right? You take a point in the network and you look at who they follow and who follows them and all the content that they created. And you have an algorithm that sorts and filters and then says, here's the 100 next tweets we're going to show you. Right. That kind of a curation algorithm is a generic thing you might want to apply to other kinds of content. And the idea that Twitter and Facebook and all these companies separately create these feeds, which, by the way, are designed to make them money, not to give you the content you really want. I just love the idea of inverting that, and we pay someone to just build feeds for us. And that's not the same entity that's responsible for hosting the tweets or whatever. It's not the same marketplace that's responsible for search and indexing. It's just a special thing that we pay for. It's the same kind of code. It's the same math and the same algorithms that are being run in order to create feeds, but we're just more in direct control of them because We're not purchasing them from a company in a non-monetized way. We're just directly purchasing them from a market that does feed generation. But something like feed generation is so hard because feed generation requires looking up data, running code, like, munging a bunch of stuff together and then representing it. This is an application. So to run an application like that on a cloud that's run by no one, right, requires all sorts of underlying services. I've got to be able to publish assets into this cloud and retrieve them. I've got to be able to specify an algorithm, test it, and then know that it'll run at scale. And my users plug into requesting that algorithm be run for them on their data. None of those things exist yet. So we can't just go out and replicate Twitter today on top of Bitcoin. We first have to go build all those layers. And inevitably, if you think about those more complex layers, you actually just back into, well, really, what we just need is the ability to send each other bytes on the internet, like for sats. And now you're back into the Lightning Network. And you can't really even do that because you can't really even send sats efficiently, like at the scale that we would need. And so it really just comes back down to like the core capability of a Lightning Network as a payments routing infrastructure has to get orders of magnitude better before the next layer really makes sense. But that doesn't mean we're not going to start working on the next layer. We already have. And understanding the constraints that we would be operating under in that next layer actually helps us shape how we feel a Lightning Network should evolve and grow today.
I hope you're enjoying the show so far. Just a quick message from our sponsor, Stackwork. Stackwork is a Lightning-powered platform for generating high-quality transcripts of all your audio or video content. They combine AI engines and hundreds of human workers all over the world who are paid over the Lightning Network to assemble these transcripts. And that's what lets Stackwork create better, faster, and less expensive transcripts. To see the results for yourself, you can check out my personal website where I host transcripts for all my podcast episodes. If you want to learn more about Stackwork, visit stackwork.com. That is STAK work.com. Right. So Lightning developers can kind of look at Nostr and go, hey, here's a cool new use case. What do they need? How can we build in the appropriate way to serve that need and recognize that there may be other needs that develop as well, like it. Now, I have a question for you about, because all the layering here we're talking about is layers of protocols. And I've heard
markets,
all sorts of...
And markets, I would say, as well.
And markets. Yeah. But not companies, not individual companies siloing all this stuff together. And
I would say that's
something
fair.
I hear a lot about in Bitcoin, and I've heard all sorts of things people describe as layer 3, 4, 5, 6. I've heard Cash App is layer 3. I've heard all sorts of things are, it seems like we're still stuck in a mentality of like companies are going to be represented on these layers or maybe sets of companies. But I want to get your perspective on the role of a company in a world where we do have this layered protocol and market system, and we have all these healthy layers built up, distributed markets. What is the role of the company at that stage? How does that structure change the way in which companies earn money, the size of the companies, anything else?
I think there's a few ways you could think about this. So trivially, companies are still required in the human economy. Yes, agree. Not everything is digital, right? There's still a physical world, there's still human beings, the notion of a private enterprise still exists. Not everything is completely distributed at all times. With that said, I think there are some areas where it's really hard to make companies in a model like this. So for example, you might imagine a future version of a social networking phenomenon. Someone comes up with a really cool app. A company comes up with a really cool app. Now they're able to use these kinds of distributed marketplaces to deploy their app. So really their app is just a somehow private thing. Private things still exist. I want to be clear about that. You still have cryptography, so you can still have private code and private applications. I talked about IP being dead, but that's a slightly different idea here. You could still have private code and deployment. So a company could still exist. They could build some software that's private software, deploy it. You could run it more or less. But my claim is if something like Twitter was invented in this future era and we're like, hey, this is really cool. People seem to like this thing. What immediately would happen is that marketplaces would arise to just do that thing, right? Oh, people like this. They made up a thing called a tweet that has these properties. You know what? I'll just start storing all their tweets. And you want their tweets? You don't have to pay them and their server. Just pay me. I'll give you the same tweets. To a degree, it'll be hard to defend the notion of where company and our value as a company is we have a a network of users that is like trapped here, right? Trapping users becomes harder. And so companies that operate on that as their fundamental business model, I think will struggle. Conversely, like no matter how distributed the thing gets, like there's going to be this need of like, hey, I have an issue with this thing. I need expertise. I need help. And maybe the answer there is, okay, it's just AI or whatever. Okay, so everything is automated. I don't know. But I don't believe that. I believe that the notion of like supporting things will still require human beings, and companies can make a lot of money supporting people's market activities. Like that's already true today. Like in any market, there's a company that says, hey, we'll help you do marketing in your market so you can be more effective. Even if you are providing this market service, like you are still in some sense a company, right? Like whether you're a sole proprietor who's just running an ASIC miner in your garage, or whether you're a small private company that is running a megawatt of ASICs, like you're still a company. You're providing this market service as a company to other players in the ecosystem. I think it just becomes the notion that like a company that grows so large that its chief source of revenue is a monopoly on the thing that it built, that becomes harder to sustain. And I actually think that's okay. I don't see anything wrong with that.
Right. And so maybe some of these companies give up some of their functions to this network or layered system of distributed markets, and they focus on one particular thing, have less control over their users, and have to compete more on the merits of that one thing that they can provide, that the networks and protocols can.
And there's some simple examples of this even today. Like Twitter is a company, but there are other companies who make products that just interface with Twitter. So like that's a thing. Like I have a private Twitter client. It's much better than the other Twitter clients. And here you can use it this way and it works this way. Again, if the only thing your thing does is use other computing resources, someone will just replicate your thing and then just sell it directly and undercut you. But that also happens today in software. So I just feel like the notion of private enterprise will still exist, but the kinds of things that we expect companies to do and to own and defend will be different, because it'll just be easier for markets to replicate certain activities that companies engage in.
Interesting.
And in some sense, right, like a company is just like a way of like putting a bunch of economic incentives in front of individuals, right, and coordinating their behavior. So if you can provide a bunch of individuals coordination to do some outcome without there being a company to do it, like, and that works, like that will work. That won't work in every case, but in a lot of cases, I think it will.
Right. I want to talk about one last topic here. This was something we spoke about prior to recording. You'd mentioned Einstein and Bitcoin and changing Bitcoin and we talked about all sorts of ideas related and understanding Bitcoin before changing it. I'd love to get your perspective on what I've seen in the last couple of weeks as a renewed interest in doing different things on Bitcoin. And I spoke with Paul Stork, who's working on Drive Chain, and he's been talking about that for a while. That seemed to ignite some conversation on Twitter about whether it's a good thing or a bad thing, whether it should happen on the base layer or another layer. And we're seeing ordinals as well and inscriptions. People getting mad and people excited about JPEGs on Bitcoin. I'd love to hear your thoughts on just your view on changing Bitcoin and whether or not this is something that Bitcoiners should be pursuing, these changes, or whether or not the protocol should ossify at the base layer and permanently cease to change. Maybe
I'll try to organize my thoughts here in like three physics things that I think kind of connect to this idea. So like the first physics thing is just the notion, it's a saying from quantum mechanics. Like I think sometimes you may have heard like, what is it? That which is not forbidden, like there's a bunch of phrases that start this way. The quantum mechanics version is that which is not forbidden is compulsory, which is an interesting statement. In the sense, like in quantum mechanics, literally everything happens all at once, all the time. There's like, I think there's a movie by that title. It's a very quantum idea. So everything that's not forbidden is compulsory. I like that notion. And to me, when I think about things like ordinals and other things like that, I almost think it's like part of that, where it's like, someone was going to try this, like I read the ordinal thing. I was like, this doesn't make any fucking sense. Like these sats are better than these sats. What are you talking about? Like, but the idea that like, it's not forbidden, you can do it. It doesn't break any of the consensus rules of Bitcoin. You're paying fee rates, like according to the market, to do this stupid thing that you like. Whatever's not forbidden is compulsory. Someone was going to do this strange thing. I'm glad it's happening now. We get to talk about it. We get to react to it. I don't view it as an attack or anything like that. I view it as a kind of experimentation. And since it's not breaking any of the rules, like I tend to support this kind of stuff. I'm not particularly excited or interested in it. I think it's an absurd idea. But those who believe that this is a cool thing, like, cool, you get to do it on Bitcoin. Good for you.
Now, does it change though? Does it change your views on whether or not changes to Bitcoin are, because I think this was like an unintended consequence. I think people looked at that and said, we didn't know that was really possible. Now that it is, we kind of don't like it. And I kind of wish we could go back. And they can't, but I kind of wish they could.
So I think that's a fun idea too, which is the notion of ossification. So this is the second physics thing I'll say here is Bitcoin is going to have to change. It's going to have to change over time. It's not done yet. Whether the changes that were made were the right changes or not, I don't know. I don't feel I'm truly enough of an expert to really say. And I think that's what's so hard about changing Bitcoin is because no one really can predict what will happen when we make certain changes that seem innocuous, but actually have deep consequences and maybe some unfortunate teeth to them. I think there's a famous story of the blue Matt, right? Matt Corallo's like put in a bug that was active in Bitcoin for a long time. I forget the details of it, but like it ultimately I think was handled and pulled out again. But it just goes to show someone as talented as him engaging in such a high bar process as Bitcoin development, like things can still slip through. And this is part of the reason I support ossification. I support in general, and I support the notion that Bitcoin should never be Turing complete. Because the one thing that we can use to protect ourselves is the notion that Bitcoin isn't an arbitrary computing environment, that it has constraints around it. So that helps us a lot to create defense. But with that said, from physics, like quantum computing, this is a thing I don't think is sufficiently. A lot of Bitcoiners don't worry about this, or they don't want to worry. I think because they don't want to worry about it. Quantum computing is coming. And when it comes, it is going to affect Bitcoin. It's going to affect everything else, but honestly, Bitcoiners are going to care about it more. Because if you had a machine to break encryption, whose encryption are you going to break? You're going to break ours. Like, we're the best thing to steal. Like, Bitcoin is the best thing. Are you going to break into government secrets and steal the plans for a helicopter? What are you going to do with that? You're going to have to like sell it to somebody. It's a whole process. Much easier to just steal Bitcoin directly. So I think Bitcoiners are going to be the first thing attacked by real quantum computers held by adversarial agents. And as a result, it is our community that is most incentivized to create post-quantum cryptography at scale. And to be clear, post-quantum cryptography exists. It already exists. Like fully homomorphic post-quantum cryptography exists. It's just not efficient, and it's at the cutting edge of what's possible. And there's not a deep reason to use it in most cases because like the stuff we do today mostly works. And as you know, people are not incentivized to improve computer security just for the reasons of improving computer security. That's not the way the world works. Because most things that are guarded by computers are trivial and aren't worth protecting. As much as we think our like private photo albums are like really precious, no one really wants to get at those at the end of the day. And so the fact that they're not very well protected doesn't hurt us. The thing that must be well protected is Bitcoin, because Bitcoin is the one thing everybody wants to steal and have and possess because it's fungible, you can use it, blah, blah. We're going to get attacked first. And so we're going to need to make some changes to Bitcoin in meaningful ways to allow for post-quantum cryptography to exist. So I will make that claim. I'll just put that out there. We're certainly not done changing Bitcoin until that happens. I don't know what the solution is to that. In fact, I would argue one of my concerns about existing Bitcoin changes like Taproot have been the lack of focus on quantum concerns, like the notion that I'm going to get the details wrong, but like Taproot exposes P2PK type paths a little bit more forwardly than we were doing previously. I don't think that's a little bit of a mistake. So yes, Bitcoin is going to have to change, if only because of physics reasons like that. I think ultimately though, the notion of change in Bitcoin is really contentious because we don't have a methodology for managing change as a community.
Right, there's no framework.
And every time someone brings up the fact that a change is required, it just freaks people the fuck out because it forces us to confront that idea. So a friend of mine, Jeremy Rubin, is like quite famous or infamous online for promoting his own changes that he wants to make to Bitcoin. And some people view what he's doing as an attack on Bitcoin. It's not an attack. Jeremy is a Bitcoiner who wants Bitcoin to succeed, and he thinks his project will help. But what he does do is he raises people's hackles because he, again, points at the fact that we don't have a process for this. It's ultimately every change is just going to be a giant fight with politics and disagreement. Maybe that's actually the best model for governance. I don't know. I'm not proposing that we need to institutionalize some sort of change process, if only because I don't feel like there should be that much change overall in the coming decades. But some more change will have to happen, if only because of quantum computing and other concerns like that. So we got to figure that out. That's my overall attitude towards change. But I think with that said, though, I want to maybe conclude with like a final physics idea. And this one's a little bit like, it's a little wordier. And I don't like some of the names that are used here, but we're kind of stuck with them. And this has to do with the notion of change versus understanding. Because I think the changes everyone will say this, the changes that I'm advocating for are really required. But I think sometimes when people, especially those who ultimately wind up in altcoin land, the changes that they ask for are actually changes that reflect a lack of understanding of Bitcoin. So, hey, I want to change Bitcoin to add my cool feature that lets me do this powerful computation right in the base layer. Well, yeah, that's not what Bitcoin is for. It's a misunderstanding of Bitcoin to ask for that kind of a change. And I think what's cool is that this connects to physics in a way that I really like. And it's a line of thinking that came down ultimately from Einstein through one of his students, John Wheeler, who was at the University of Texas at Austin for a long time, actually, another Austin connection. But there are two philosophies that Wheeler described operating in physics, and I think they both operate in Bitcoin as well. And he gave them names, and I think they're really cool names. I think they're really terrible names, but they're really cool ideas. So the names are, so he described like, there's like a core problem in physics about like gravity and the other forces and grand unified theories. Maybe you or your audience have heard of some of these decades-long issues in the world of theoretical physics, very esoteric stuff. But Wheeler identified sort of two approaches that physicists were taking historically to kind of unify, gravity and quantum mechanics or whatever else was their big challenge. He described the first approach, the one he doesn't like, as conservative radicalism, which is an interesting phrase. And it's the notion that you can make radical changes to the theory or the system, but you make those radical changes in a very conservative, small way. So you'll take like the theory of gravity and you'll say, well, what if we added one more dimension? That's a radical change, but we won't change anything else. We'll just make this one little change here and we'll just see what happens. Maybe that's enough to solve the problem. Or we'll add this particle and we'll hope that solves the problem. Or we'll go from particles to strings, and the details here don't really matter. It's the spirit of this approach, which is incremental, right? But incremental in sort of a blunder-headed way of like, I don't really understand what's happening here. Let me just change this one thing and see what happens. Wheeler talked about this as a very ineffective way to make meaningful progress in the long term. It's effective for incremental progress, but to make big paradigmatic shifts in our understanding of the world, this does not work. Instead, he advocated what he called was the opposite, which again, the names here are confusing. The first thing was conservative radicalism. He calls the second thing, the approach that he advocates, radical conservatism, which in today's political climate, radical conservatism is maybe not the label you want to tar your chosen philosophy with, or unless you do. But for him, radical conservatism means actually there was some essential lesson in the system, in gravity, right? Einstein's theory of general relativity or whatever it was. And of course, I'm about to apply all this to Bitcoin, but there was some essential lesson in this thing. And you have to like learn the lesson really well. And you have to then be really conservative in the sense that don't go outside the bounds. Whatever truth was exposed in this lesson, like in gravity, would be something like mass and energy change space-time, or that all, different observers' viewpoints are equally valid. It could be some essential truth or learning like that. So what you do is you like enshrine that as holy, and then you take that idea and you run with it as far as you can. So you are conservative in your unwillingness to change the underlying rules of the system. You think it's right, like you have to absorb the lesson. Having absorbed the lesson, you are now radical in your application of that lesson. You take it as far as you possibly can. And for Wheeler, this meant you don't just change things randomly, you understand them deeply, and then you follow their consequences as far as you possibly can. Now, bringing all of this back to Bitcoin, Bitcoin isn't the final solution for the distribution of the world, as we've been talking about, right? There are layers. There are all these things that Bitcoin can't do. And there's a desire that people have, like, I want Bitcoin to do this thing. I want to fix this thing. And the thing that Wheeler didn't like, right, the I'm already getting it backwards, right? Which is why I hate these names, but they're taking the conservative radical approach to Bitcoin and saying, well, Bitcoin doesn't solve my problems. You know what I'm going to do? I'm going to change one little thing about it. I'm going to make the script interpreter Turing complete. Done. Now I have Ethereum. That's going to fix all my problems. This is not a Wheeler-approved solution. This is a form of incremental tinkering that ignores the core lessons of the system and hopes that by making one radical change, I can somehow cause Bitcoin to scale. I can solve every other problem. And the reason this doesn't work is inevitably what winds up happening, and this happened in the world of theoretical physics, but also happens in Ethereum. You make this radical change, you've actually broken the system. It stops working in meaningful ways. And you then have to add another radical change to prop up this thing that you broke. And then you add up another one over here. And before you know it, in the land of physics, you're talking about the multiverse with infinite number of universes with arbitrary laws, and you can't make any predictions anymore. And who even knows what's happened? And I kind of see a similar trend in Ethereum. You make this radical change that fundamentally, I think, breaks Bitcoin by making it Turing complete. Now you have to invent gas, because you don't know that in Bitcoin, you always know that script will complete with finite resources and in finite time. You do not know this in Ethereum because you injected Turing completeness and you broke it. So now you have to add more complications. You have to invent the concept of gas just to make sure that nodes can process and not crank when someone injects an infinite loop into a smart contract. So you've now, by making one radical change and completely misunderstanding the point of the system, you're now forced to make other radical changes, and you wind up with this house of cards. Like the Wheeler approach here would be, like the radical conservative approach would be, what was the system teaching you? What was Bitcoin's lesson? And I think the lesson was, you solve the problem with a market, not with a blockchain. You must create an economic incentive that causes individuals without coordination to show up and provide the service. That's the lesson of Bitcoin. And the radical conservative approach would be to take that core insight, the notion that markets are the best way to coordinate resource and service allocation and delivery, and run with it as far as you possibly can. And that means you don't just change the blockchain in some dumb way and then hope that that solves the problem. You deeply think about, how can I get market influence forces to build a transaction network in the form of Lightning for me? Well, you pay them with sats, you put a price on liquidity, you have a Lightning Network reference rate, you use market forces to create the service you want, which is payments, and it turns out networking. Okay, cool, now you have networking. So how do you build the world computer? You don't just like throw all the data in the blockchain again, right? You create markets that provide specific core functions like data delivery, CDNs, search and indexing, like we were talking about before. And again, this whole time, we're trying to apply Wheeler's insights of, like, when you're confronted with some crazy new thing, you don't just ignore the lesson, you embrace the lesson and you take it as far as you can. And I think that's what, in a nutshell, almost, I'm trying to get Bitcoiners to talk about more, which is like, look, we get it. We radically believe that Bitcoin is the correct solution to engineering distributed economic incentives. Let's embrace that solution by focusing on how to use the existing currency we built, the strongest money in history, Bitcoin, and use that as the basis to create economic incentives for other systems we want to engineer. Like, that's the Wheeler approach here, and it's something I'm trying to do. And I think anybody who's thinking about Bitcoin's development in terms of layers is thinking that way, because they're realizing that it's not the blockchain that was revolutionary here. It was the notion of a market with no centralized point of control. How do we replicate that to other areas?
Well said. I think that's a great note to end this segment. I do want to jump into one final rapid fire round I do at the end of every show. It's called the lightning round. A few rapid fire questions for you. First one, is there been any book that has meaningfully changed your view of the world?
Many. Yes, many books.
I figured.
I'll toss one out that I think is really good for Bitcoiners to read, and it's called The Dispossessed by Ursula K. Le Guin. It's a book about anarchy and space, because I'm a space nerd. But I think what's really compelling about the book is it's got a cool narrative structure, but that's an aside. Where it's cool for Bitcoiners is, I wouldn't say I'm an anarchist, by the way, by any means, but this book is a really interesting introduction to what a functioning anarchic system, as well as a dysfunctional one, might look like. And I think the main lesson of the book is that anarchy is ultimately, it's not a place you reach, it's a process you engage in. And then if you're a true anarchist, you're always questioning the systems that you're a part of, and you're always trying to create greater freedom and greater individuality. And I think that's, again, fits into the way that I think about Bitcoin, that if we want to be like the protagonist of The Dispossessed, like, Bitcoin is not a thing we achieve and like, hey, I'm on Bitcoin now, I'm done. It's a process. And we're constantly having to question, like as Bitcoiners, how much we're falling into tribalism, how much we're falling into groupthink, how much we're falling into authoritarianism. I've loved seeing Ordinals, to return to that, trigger latent authoritarianism in so many Bitcoiners online. That's been a wonderful thing to see. And it just reminds me that no one is the endpoint of their Bitcoin journey. That like the character in this book, like it's always a process of constant questioning and reinvention if we really want to succeed and get to the promised land of what, in Ursula's book, like what anarchy could mean for human freedom, but in this case, what Bitcoin could mean for human flourishing.
Nice. If you weren't working in Bitcoin, what would you be doing?
If I weren't working in Bitcoin, it's so much easier to answer if I weren't working at Unchained in particular, because I would be doing something else in Bitcoin, I'm sure. If I weren't working in Bitcoin, I would be making computer video games, I'm pretty sure.
Nice.
I recently, a year and a half ago, I think during a quiet period at work, I cracked open like a video game engine, Unity. Like I'd never really played with it before, and I started like making some visualizations and games, and it was some of the most exciting and fun programming I had done in a number of years. Like programming, for those who do it and those that don't, is very satisfying because you're getting to like build a little machine and you hit go and it like does stuff, and the feedback is very quick and very fast. So I've always liked that about programming. This was programming with so many more visual things attached, like shapes and characters and motion and geometry and physics. And I was having to talk about quaternions to talk about rotations, and I love quaternions as a math nerd. And suddenly I was like, oh God, I got to put this away because this is like everything I like in one box, and I have a business to run. So I think that's probably my answer. If I weren't in Bitcoin, I'd be making video games.
Fair enough. Who is one person that you'd like to give a shout out to for doing great work in the Bitcoin or Lightning ecosystem?
Wow, that's a really good question. I wish I had thought of an answer in advance. Let's go with Nostr and the creator of Nostr for creating so much like interesting behavior, both in Bitcoin, outside of Bitcoin, creating just like such an exciting conversation around what layers and stuff could be. I think part of the reason we're even talking is because Nostr has bloomed in the last few months, and it felt like this was a good time for us to connect. So I don't know the guy's name. I'm so sorry.
Oh, yeah, Joff, who created Nostr.
There we go. Yeah, that's the person I'll pick for now.
Great. Great choice. All right. Finally, before we go, where can listeners go to learn more about you and your work?
So I typically blog on Unchained's blogs. If you go to unchained.com/blog, you'll find some articles there. Hopefully a lot of the stuff that we're talking about will ultimately be published there. I do tweet less these days, I think, like a lot of people, at Dhruv Bansal. So you can find me there as well. I am not on Nostr yet, believe it or not. I will get there. I will get there.
All right. Well, thank you again for taking the time. This was an incredible conversation. I enjoyed it a lot. And I hope listeners do too.
Thanks for having me, Kevin. This was awesome.
In the last 30 days, you guys sent in 236,693 sats. And that came in from 147 different supporters. And I have to say, it is absolutely crazy to see these numbers continue to climb up week after week, month after month, and to see 150 people almost contributing to the show in the last month. Crazy to see. Thank you to everyone who's been contributing. Let's run through some of the top comments of the last week or so since the last episode was published. We have a few people have created clips, which I now see in my Fountain interface. We have a few comments here too. We have BTC Rich, who sent 5,000 sats and said, Kevin, your shows are pure signal. Amazing to think you are nearly at 100 shows, and I've enjoyed listening to them all. Thank you, BTC Rich, for the sats and for the kind words. I really appreciate that, and we're getting pretty close to number 100. Urza_CC boosted 1,337 sats and said, I agree with Nicholas, this is Nicholas on episode 95, that real-time settlement is the killer feature of the Lightning Network, which makes me think I'm not so sure that Lightning is the end of the payments layer. What I mean is that, in essence, Lightning is Swift on steroids, but maybe not Visa. Maybe for paying at the merchant, we'll need something on top of Lightning, not Lightning itself. Similarly, how at the beginning of Bitcoin years ago, we didn't recognize that layer 1 was not good for paying for coffee. Who knows? As we talked about in this conversation with Dhruv, Bitcoin will scale in layers. I don't really know what layer 3 and 4 and 5 have in store for us, but we will find out. Nat Gas Immersion sent in 80,085 sats, huge boost on episode 94, and said, Morgan, masterpiece as always. Thanks for the info, and keep it up, Kevin. Thank you for the massive boost. OSKARS010791 sent 101 sats and said, good luck, in response to episode 95 with Nicholas Gregory. And then we had a few new users creating clips on Fountain of past episodes. I appreciate that, and it's great to see clips of past shows spreading on Fountain. Thank you again for everyone who's been contributing to the show, and I can't wait to see what you guys send in this week.